For more on Facebook and Tesla earnings, let's bring in Fast Money friend and Loup Ventures founder, Gene Munster. So, Gene, a lot to choose from. Let's start off with Facebook. Why do you think the stock's up so much?
It's up because expectations were so low. There were a lot of people like me who are doubters on the Facebook story. And I think if you look at the quarter, it was quite impressive, in particular around the user growth numbers, up 9% year over year in the face of what Dan was talking about, those tough delete Facebook campaigns. That really is something that Facebook can feel good about, that their user growth is sustainable. And second is advertisers really have no place to go. This is the only platform that has scale and the targetability of ads. And so you see that in the ARPU, the revenue per user, increasing. That I think that is evidence that advertisers have nowhere to go. I do want to draw that line between the quarter and the company at longer term, because I think that we're still not out of the clear here. In particular, they will talk on the call, which is just getting going, about a change in their ad units. They talked about this last quarter, going from newsfeed to stories, which are harder to monetize, and separately what's going to happen around regulation. And so fundamentally, I think that we haven't reached an inflection point on the positive side on the Tesla story, but they did a great job in the face of a lot of headwinds in the September quarter.
So even though the metrics looked good, Gene, the jury is still out as to whether or not in their switch to stories, more so than from news feeds, that you'll get the same sort of ad sell-through rate, because there are fewer ads in stories versus the news feed, correct?
That's exactly right, Melissa, is that stories, they basically took a page, unapologetically took a page from Snapchat here. Facebook did, and the stories product doesn't have as long of a shelf life. It disappears after a day. And so, yes, that's harder to monetize. And Zuckerberg recognizes that Facebook fundamentally, the part about comparing yourself to others does not make the world a better place. So they're trying to steer towards more enlightening engagements. And stories tends to be between friends and family. And so that's why they're going for this. So I think it's important that investors recognize that at the core, at the top, Facebook wants to push a product that the monetization is still clearly lower than their current bread and butter newsfeed.
Mm-hmm. What do you make of Tesla so far, Gene?
I think the market's got this wrong. Is that Tesla? This is probably an example where, if you look at the quarter, didn't seem to be that great, but I think it lays the foundation for this company reaching escape velocity, which means that they can ride this EV curve. And I think the two most encouraging points were on Model 3 gross margin, the second consecutive quarter above 20%. That's the key. 75% of Tesla units next year are going to be Model 3. They need to do that profitably, and that was important. I think that the second piece is that demand overall for Model 3, despite this increase in competition, continues to do well. They've opened up some new markets with China and Europe, and that seems to be on pace. And the guide down in March was more related to in-transit vehicles. It takes about 5 or 7 weeks to get cars over those markets. And so it's less about any issue with demand on that punky guide. It's more about just the logistics of moving these cars around. So I was very encouraged. I suspect the stock will ultimately trade higher over the next few days.
What's your biggest question on this call, which starts 15 minutes or so?
Biggest question on the Tesla call is them trying to really get down to the U.S. piece of demand. We know the global demand's great. How that tax tax effect has impacted that. And also, I'm going to be listening if we get any hints to that Model Y. The SUV category is one of the hottest categories, along with there's three things, Melissa. The third is when we're going to see that $35,000 price. That is when this Tesla story really gets moving, is when that $35,000 Model 3 is available.
All right, Gene, we'll check in with you a little bit later on in the show. What's your reaction based on what Gene has said about either of these names?
Well, he started out by saying he thinks the street's got it wrong
on Tesla.
And I just don't see it. You know, I just don't see that Model 3 ever being $35,000. I see this company as a recession away from being desperate to secure funding for whatever they can do. You know, listen, they make great cars. He's a great entrepreneur. They're doing a lot of interesting things. If you think holistically about what they're doing, I just don't buy the story anymore. And I don't like the fact that before this guy down, he's out last week talking about critical profitability, all that sort of stuff. It just stinks to me. So I don't know how shareholders feel good about the messaging that we get from this company, and it seems to change quite often.
Well, nothing new on that. I'd say, look, we've had a lot of news and a lot of data points out of Tesla over the last 2 months, and some of it on deliveries have been good, but you know, we've gotten some issues in terms of demand, we've gotten some issues in terms of staffing, some pressure in terms of the business model, and it doesn't surprise me from 380 to 280 that we're trading near the bottom of that range.